anytime you have a goal, like if my goal is to lose weight, is it better for me to start today or in 6 months from now? It's always better to start today. Like even if I'm, I don't know what a market cycle would look like if you were trying to lose weight, but let's say I'm about to go on a vacation for a month. Would it be better to say, hey, I'm going to start losing weight when I get back from my vacation? Or I'm going to be mindful, like, hey, maybe I'm not going to like dive into working out like 7 days a week and giving up alcohol while I'm on vacation. But if I know that I want to lose weight, I'm going to be mindful even when I'm on that vacation. I'm going to make better decisions, right? And so even if you're in a market cycle like we're in, but now I'm going to make the opposite argument. We're at the bottom part. If we look at a market cycle as a clock, where 12 o'clock is the top of the market and 6 o'clock is the bottom of the market, the way I see it, we're at least at 5 o'clock right now. Like we may not quite be at the bottom. We may be, we may not be. I don't know. Blackstone just invested $10 billion in multifamily. Many see that as a sign that Blackstone believes we're near the bottom of the cycle. Again, I don't know for sure, but what's occurring for me is we're well past 4:30. We're somewhere between 5 and 6 o'clock, meaning that's where I believe we are. And what that means for us is that real estate is on sale. Prices are down. I can speak from direct experience as a buyer and a seller. Prices are down 20%, maybe 15 to 30% across the board, but on average 20%. So we could buy real estate for 20% cheaper today than we could yesterday. There's less competition. It's more of a buyer's market. Buyers are negotiating better terms than I've ever seen in a decade. So now is a great time to learn, build your team, and be getting in to deals and making lowball offers. Well, we didn't make lowball offers for 5 years. And now, I'm telling my students, now's the time to make that lower offer. Okay. It is. And I know some of the brokers out there may not want to hear it, but hey, I just listed a property for sale, Nate. You and your team are reviewing my purchase agreement right now, and we're about to go to escrow. I'm selling it for $2 million less than I want.
Just to kind of throw out in terms of if you're interested in getting into real estate, it's been a tough 12, 24 months, give or take, because the interest rates are higher. What interest rates are higher means the value of properties have been going down. That's what creates the opportunities, but also what's been estimated, who knows if it'll happen or not, interest rates will start going down again. And that will naturally push up the prices and push up the acquisition value. So you actually now is the right time because of the higher interest rates, because it is actually tighter, because it's not going to last forever. And that's exactly why the Blackstones of the world, at least in my opinion, are really looking heavily at this point of time to really get into the multifamily and get into the real estate arena.
Yep, exactly. Yeah. So look, and also the tax advantages, we are still in a bonus depreciation situation. So if you invest money in multifamily in 2024, you will get more tax deductions than if you wait until 2025 and 2026. It's a fact.
Could you describe what bonus deduction actually means? There's so many people just don't understand it. I don't understand all the tax ramifications.
Yeah, so I'm going to do my best to do this in at a high level. So when we buy a property, the government lets you depreciate the value. Depreciation is basically it goes down in value based on wear and tear. In multifamily, that depreciation has nothing to do with market value. So market value is I buy it at 10 million, I sell it at 15 million because we increase the NOI, the net income. Okay. But again, that $10 million property every year, the government on our tax return lets it go down in value at a certain rate. And what we do is we do something called a cost segregation study, and that firm will go in, and what happens is everything in an apartment building does not depreciate at the same rate. We have things that depreciate over 5 years, 15 years, and 27.5 years, hence the term cost segregation. And so what bonus depreciation does is all that 5 and 15-year property gets to be accelerated in the year of acquisition. It's incredible. It's a huge, and it's 100% legal. It was passed in 2017 by the Trump administration, and it is designed to be phased out by 2026. And so between 2017 and 2026, what it means is when we buy a deal, buy an apartment community, we get more depreciation now than we will after 2026. And we're in a phase out period, meaning from 2018 until 2022, we got 100% of all the 5 and 15-year property deductible in the first year of acquisition. 2023 was 80%, 2024 is 60%, 2025 will be 40%, and 2026 will be 20%. So you will get more tax savings this year than next year if you invest in a multifamily building.
Makes sense. Well, just before we end up jumping, I do want to share once again that you've got this Rat Race to Retirement. It's an event at the end of this month, but and that's where you get to mix and mingle with a whole bunch of other guys that are really focused on investing in real estate, both as the general partners, the guys making the deals, as well as a passive. But I'll say this, there's a time sensitivity to it. So definitely check it out now. However, I bring up this QR code. The link is in chat. When it's over, Brad's group has nonstop education, opportunities to network, to mastermind, to grow. So even when this is over, go check out the landing page, because we're going to have more information about how to get mentored, how to grow your own business in real estate, your own portfolio in real estate. So whether or not you're watching this in April, May, June, or on, check it out, and we'll absolutely be connecting you with Brad Sumrok and his Sumrok group. So just want to throw that out there for anybody that's watching this later on.
Yes, and thank you for that, because and I may have missed this, but if we are past April 26th through 28th, you just go to bradsumrock.com. We have free training. We have a $97 home study. You can find me personally on Instagram, Facebook, and LinkedIn. And I still manage my own social, at least up until the date of this recording. And a lot of people ask, hey, Brad, do you really respond to your direct messages? And I do. So I invite you to reach out to me, go to my website. But if you're listening to this live right now or before April 26th, and you can make it to Dallas, Texas, I'm just going to tell you, you got to be at this event. And what I'm offering to people, if you come to this event and by the end of day 2 on Saturday, you don't see value in it, I'll give you not 100% of your money back, but 200% of your money back. I put my money where my mouth is. And why do I do that? Because I know you're going to get value.
Absolutely love it, and truly appreciate you joining today, sharing a little bit more about building your own real estate portfolio and just really making amazing things happen. I truly appreciate you being here today.
Thank you. It was a pleasure.
Any final words or thoughts before we jump on and jump out?
Well, I would just say this. A year from now, if you've been waiting on the sidelines, a year from now, you're going to regret it. Once they start lowering interest rates, like what happened with Blackstone, there's tens of billions of dollars of family office money, institutional money, even retail investors like us that are hesitant, waiting on the sidelines. And once they start cutting rates, we're going to be past the 7 o'clock period of the market cycle. Money's going to be pouring in. Prices are going to be going up. And I'll just say this. I don't know anybody in 2008, 9, and 10 that says, hey, I wish I would have bought less real estate. Everybody I know during that time wishes they would have bought more. And this is that time.
It's only been a decade of a bull market, and taking a little dip just is going to create more opportunity. So definitely want to throw that out there. And here's the guy that can show you the path to making millions. So thank you everybody for joining today. Really appreciate you. This will be up on YouTube if you happen to want to share it later. But Brad, Sumrok, thank you so much for joining us today. Truly appreciate you.
All right, let's go, everybody.